Good morning and welcome back to the Opportunistic Trader. I apologize. This is not coming to you live. We have some audio video problems. Hopefully, it still helps you out. I want to quickly go over markets. The Asian markets bounced back last night. They were strong. They were looking weak early on, but China, once again, is really trying to hold up their market, which is good for our positions because we are basically looking long China and short the US. Trade's just been okay, hasn't materialized. We think once there's a deal, it will. Overall, markets are a flip of yesterday. Obviously, not as strong this morning as they were down yesterday, but recouped 3:30 yesterday or 3:15. The S&P was trading at 2617, and now we're 30 plus handles higher than that, and there's no selling, and a lot of that is because Kudlow came on because he was eating lunch, and Trump said, get out there and save the market. He still had his napkin tucked into his shirt. No, I'm only kidding. But he did come out and come up with some BS that everything's fine. So it's more of the same, and I think this will go on until March for the most part, and they will come up with a deal. That is for certain. It's just a matter of what that deal is, and it's not going to look too good, but they're going to try to get something done. Volatility popped yesterday. It was down at 18. It popped up to 21 off of a 40 handle down day, and now we're back at 20. So 20 is the new normal, as what's his name from PIMCO says, the new normal. I don't know what he means, but it's always the new normal.
Define normal, right?
Yeah, so the new normal is that. Anyway, I'm joined by Mike and Vince. I'm going to throw it to Vince for a quick update and his thoughts, and I'll
a comment on yesterday, because we did discuss this yesterday in a macro sense, talking about the equity markets. In a macro sense, if you look at what happened yesterday, you had two definitive bad news items come out. Not like 2 nights ago, overnight for yesterday, you had the IMF downgrade its GDP expectations globally, and the Asian, mostly the Asian, but the European stock market as well. The DAX sold off a little bit, but the stock markets across the globe sold off. Now, the U.S. stock market was down somewhere between 8 and 10 handles in futures when that announcement came out. And so that was an instance of bad news being interpreted as bad for the market. So I looked at that and I said, okay, let's see what happens today. And then the housing stats came out and they were bad for the market. And you may or may not remember, I had a short in the SPY. And then when that bad news came out, I kind of got nervous because I figured, okay, bad news is out. That allows people to start perceiving as Powell taking his foot off the pedal or off the throat of the market, and the market should probably rally. And lo and behold, the market did not rally. So that's a second instance in one day of the bad news being interpreted as bearish for the market. And my early thesis, it's not a trend, right? It's not something I'm trading on yet, is note that if the markets globally are interpreting bad news as bad for stocks, one, speaking about Asia and Europe, they're running very low interest rates. They don't really have much more room unless you're going to go negative to rescue their markets. Monetary policy is not the answer. And in the US, too, it's possible, it's very early to tell, but it's possible that you're looking at a market that's saying, well, Powell's going to do what he's going to do regardless, and hope has not sprung eternal. And the Kudlow comment, he came out, the market rallied, then the market sold off, like after he hung up the phone, basically. And of course, overnight it rallied, but the half-life of his actual comments was kind of short. So that's my comment. I'm just starting to be aware of. Well, I can't tell because, like you said, Larry, yesterday was a muddy market, and it's hard to interpret trend versus noise. So we'd have to see if that sort of thing happened again. But the market is definitely taking bad news as bad news at least one day in a row. If I could throw a couple active trading levels that I'm looking at today out there, and then step aside. Today, just to give you some quantified levels that I'm looking at, I'm friendly to the ES above 2642, neutral between 2642 and 28, and bearish below 28. It's not necessarily meaning that I'm trading these, but I'm looking at them for other indicators if those levels are breached. In natural gas, I'm friendly above 314 and change, neutral between 314 and 304, and bearish below 304. Feel free to trade the range in between those numbers if you like them. Feel free to fade the momentum, or feel free to trade within it. In the NASDAQ, I'm bullish above 66.87 and change, neutral between 66.87 and 66.46, spot 24, and bearish below that last number. Oil, I have nothing on my radar, and gold, as stated during the gold broadcast, bullish above 1288 and bearish below 1278. I do have a signal in gold right now, but I just can't play it because it's just right above the support level. Those are some levels that I have today that I'll be looking at, and hopefully, if something good happens, I'll throw a trade up in the chat.
Yeah, you made a good point. Yesterday's housing data was really bad, and at first markets were selling off. Then the Kudlow news brought us back. It'll be interesting to see how we react. Yesterday, technology was very heavy and was the lagger throughout the day. So you're gonna have to wait for the market to open. Right now, every stock I see is green. That said, nothing's up too big. Amazon's up about a little over 1%. Everything else is up about 1/4 to 1/2%.
IBM
had good numbers yesterday.
Yeah, very good numbers
there. Right. So and as a savvy trader, as a savvy trader said, I should have bought IBM when it sold off because, quote, he said to me, IBM is a real company, and they would have they would have said something in Davos about their earnings if it were negative. And there you go. Like, I mean, that's a after the fact statement to make. But
I don't know. IBM's missed the number. Literally, this is like the first time I ever remember them making a number ever.
Exactly.
Literally ever.
No, IBM has been. IBM is no longer a great company, but they're professional. And the fact that they didn't come out again and say, okay, we're going to miss our numbers again, in an opportunity at Davos, that was, in retrospect, probably a safe bet to, usually companies like IBM at least want to let people know ahead of time to massage the bad news. And they didn't do that this time. So that was a buy, and that's something that a trader friend of mine did or didn't do, and kicked himself for not doing it. But he trades like that. He trades events based on what's said and not said. That's not my style, but it's a good point to observe. IBM's numbers were good, and the market reacted to it.
The one thing I do want to point out, we had a question yesterday. We were talking about the straddle, and I just put up this straddle screen. I put up the options ladder for the mini S&P Wednesday options. So yesterday we were talking about the Monday options, which due to holiday were actually on Tuesday. But you can see here where the arrow is. This is the Wednesday option. It shows 0 days, which expires at the close of business today. So right now we're trading 26.45. So we can take a look at this line item, and they were asking, how did we see the straddle? So you can see 26.45 on the left-hand side. You have the calls, 7 1/4 bid at 7.75, and on the right, 7 1/4 at 8. So that would roughly make the straddle, adding both bids, 14.5 bid roughly. So right now it's basically pricing at about 14.5. Yesterday we were talking about the 55 straddle. I believe we were talking about it at $12, and then we did trade down to 17. So selling the straddle yesterday, or buying the straddle, was a good trade yesterday, because you could have bought it at $12. It went down for roughly trading over $30, over almost $40 actually at one point.
Right. As long as you didn't hedge your gamma intraday. You know what I mean? Like, if you bought that straddle and held it to the bell, that was a stud play. The problem with moves like yesterday, and I think we all understand this, is that it's hard to interpret when you have slow, orderly moves. People kind of, people that are long options players, such as myself, get kind of nervous, and they hedge their gamma aggressively, and they end up cutting their profits short. But the patient play yesterday was to just let it go and be careful that of headline news for reversal. I mean,
I just wanted to point out one other thing. So right here, I'm highlighting the 26.55 calls, which right now are 365 at 395. one strategy that often happens in the market is you could sell the market right here, sell short. Like if you're bearish, you could sell the market here at 46, 26.46, buy these calls, the 55 calls for 3.95. Your maximum loss in that case for the day would be at 59, so 26.59, and I get that by adding you're long the 55 calls, you're paying $4, so your max loss would be about $13 here, opposed to having a stop out sometimes. So that's another example.
Yeah, you could utilize those calls. The only problem is if the straddle is trading at $13, it's basically pricing that those options are really not going to give you too much help, because really you're not only long the straddle, you're really long a wing against the hedge. So, most likely, you got to look at that position in a way as naked futures and with a stop out to the upside. But really, to make money, you're gonna, if you sold them here, you got to take away the premium in those options against it. So you take your price down to like 43, but it definitely works on the upside to stop you out. But when you have cheap straddles like that, it's it's tough. If you get stopped out, it means the straddle basically worked. So
Right.
it's an interesting it's an interesting way to look at it. But on a day like today, they're telling you by pricing the straddle at $13 or whatever that we're not going to have that kind of move. But again, it does price you out at $13. So you could do that trade and go to the beach and wait and hope the market goes down. But you start
Right.
making money on the downside at 42, and you start losing money at 42. So,
Larry, generally speaking, you're a short side player on options, and I'm a long side player. Yesterday could have been a day, had you, and I'm not saying what you would have done, but yesterday's a classic day from my experience where longs of options and shorts of options would have lost money. Speaking as a long, I would have hedged my gamma aggressively, and the market would have went through, and I would have locked in my losses and not made any money. And
Oh,
it's
really?
possible.
I thought the straddle was cheap yesterday. We looked at it. It was, I think, Mike, we started looking at the 55 straddle.
55 was $12.
Well,
Right.
I would have broken even. My discipline is kind of like this.
So you would have made $25 on that trade, and then you could have had, you could have traded around the move. But
No, understood. I didn't, but that's not my discipline. And if I rarely trade short-term straddles, and if I had traded a very short-term straddle, one-day straddle like that, using my normal options gamma discipline, I would have lost money. That when I have to trade short-term straddles, it's either because someone wants to trade it and I have to make a market, and I bite my nails the rest of the day, and I end up getting lifted, or I trade them because I have my own holes in my position and I need to just buy something to cover a hole. But if I were to just spec on a straddle as a long vol gamma player, I would have locked in at best break even yesterday, because I would have been hedging my gamma in 2-hour increments throughout the day, and I would have lost money. That's an example of how longs and shorts can lose money. Longs let their profit short, and shorts let their losses run, and somebody else makes money.
All right. Well, in an effort to wrap up a little early, because I want to get the replay out to everybody, Larry, what are your thoughts for the day? Any actionable levels? Anything you're looking at? Anything to be a catalyst? Any sectors?
I think I would maybe short S&Ps against 2650 on the upside. Other than that, market got everybody a little bit short overnight. I think this is a lot of covering. The S&P is outperforming NASDAQ, even though percentage-wise it's about the same, but they usually run at a higher correlation, like almost 2 to 1. So the technology is still a little bit weaker. But overall, they caught everybody. They caught them yesterday. So there's probably a little bit more upside. And again, these fake news headlines are, really hampering the market in general. But overall, we're still positive. China trade, we do believe there's going to be something. I think once they do a deal, that China will be lifted. That index is at about 2,500. We think it trades above 5,000, which is a pretty, I mean, 3,000, I'm sorry, 2,500 to 3,000. So a 20% up move we expect in China in the not too distant future. So that's really what I'm looking at. Interesting today, bonds are down exactly what they were up yesterday. I think they were up about 27 or 28. They're down 27. So everything reversed. You know, I know Vince always talks gold, but gold is a weird one. Yesterday did not rally the way it should have in a down 50 tape. And then today it's down again. So it's sort of, you know, higher end of the range on the upside, but not through 1,300. I think we traded above 1,300 at some point, either late last year or early this year. But there doesn't
just
seem
above
like
1,340 cents.
Yeah.
Right, and that's served as a top since then.
Yeah, so that's all, and the market seems a bit quiet. It is an expiration day. We discussed the straddle at $13. It's probably a short today for a trade. I don't really see a big move coming either way. It's going to be hard to take them up through the top here, and you have buyers against 26.15, 26.10. So those are the levels, and you know, we'll be in the chat room. Hopefully, we'll have our audio video issue fixed, and we'll be coming to you a bit later. And what's the schedule? We have Adam Collins today.
So what we're gonna do, we'll have Adam Collins on at 10 o'clock. We have Adam Collins is at 11 o'clock. Tracy's at noon. But they'll be delayed by at least half an hour each,
unless we have the problem.
Unless we have it back up, yeah.
I'd like to interject before we go off.
Sure.
We do have some data today. So at 10 a.m., whether, you know, again, we have light data, and because of the government shutdown, but the data that comes out sometimes gets, as a result of this, gets more attention. But we have the January Richmond Fed Manufacturing Index at 10 a.m. And in earnings today, something to watch, we've got Ford, Procter & Gamble, and Comcast among the companies reporting. So it may be a flat day, and it may be a big day post-market. We'll see. But there is some earnings will be more important, I think, when we have a lack of macro data coming out because of the Fed shutdown. I mean, the government shutdown. So that's what's on the table today.
All right, so this will be up in the replay tab. Talk to everybody later.